Welcome to GRE. I'm your host, Keith Weinhold. If you look at your trajectory as a real estate investor, you might think, I'll never be able to afford that $8 million apartment building. Today, we discuss how you can do that with a proven technique to go bigger, faster with two great guests, the real estate guys about syndication, today on Get Rich Education. With JWB Real Estate Capital, Jacksonville real estate has outperformed the stock market by 44% over the last 20 years. It's proven to be a more stable asset, especially during recessions. Their vertically integrated strategy has led to 79% more home price appreciation compared to the average Jacksonville investor since 2013. JWB is ready to help your money make money, and to make it easy for everyday investors, get started at jwbrealestate.com/GRE. That's jwbrealestate.com/GRE.
You're listening to the show that has created more financial freedom than nearly any show in the world. This is Get Rich Education.
Welcome to GRE, from Greenwich, England to Greenwich Village, Manhattan in New York City, and across 188 nations worldwide. You are back in that abundant investing place where financially free beats debt free, and you are doing the right thing before you do things right. I'm your host, Keith Weinhold, and this is Get Rich Education. Now, your investing journey, it might be on the same path as mine, because financially free beats debt free, and rather than paying off properties, oftentimes you want to constantly trade them up tax deferred for more and larger properties, rather than trying to get a small property paid off, which is sort of a small thought paradigm. Well, on my way to trading up from single family homes to duplexes to fourplexes to larger properties, something I noticed along that journey is that it seemed like once I got into the size of acquiring buildings that were $1 to $1.5 million in price, something interesting began to happen. I was the only person signing on the buyer's side when it came time to buy that building. I was often buying through my single member LLC, but I would notice when we were in contract closing up the deal that the seller, they would have to obtain 5 signatures. Yeah, I was buying a property from 5 co-owners. And the more and the larger buildings that I bought, well, it seemed like there were more and more of these co-owners for one building. Yet I was the sole buyer, and there was rarely a sole seller. I was buying from an ownership group. The bigger I got, well, I soon learned that I was buying from a person and group that syndicated that apartment building because one owner couldn't afford the building, his or herself. They needed partners and investors. And I think you know that my strategy and how I'm able to afford more all by myself is that it's smart to put small down payments into the largest property that I can, as long as I can control cash flows just by trading up from smaller property and getting the funds that way. Well, you might wonder, how would you buy, say, an $8 million apartment building? It might seem like a stretch for you to do that yourself, but it isn't if you know how to legally aggregate and pool other investors' capital into a deal or a property that you have identified, and that process is known as real estate syndication. That's what we'll be discussing more today with two guests whose influence has really had a profound impact on me, both personally and professionally. But first, it is such an interesting and turbulent time in the financial world, much of which hasn't trickled into real estate. Now, something like the high inflation has for a couple years, but these recent bank failures have a lot of, conventional investors and consumers on edge. I have covered a lot of that, which I wrote about myself in our latest newsletter, with a lot of insights about what this all means for real estate investors. And, sometimes there is just way more news each week than we can fit in on our weekly show here. So if you want to read my Don't Quit Your Daydream letter, you can still do that and get that delivered right to your inbox directly from me, and it is completely free. Always the top real estate insights. It helps you make money in your sleep, and it updates you on all the important real estate trends. It is full of value. It is devoid of hype. It is just real content that makes a real difference in your life. So to get my letter straight from me, simply text 3 letters GRE to 66866. That's text GRE to 66866. Now, today's guests, the real estate guys, among other things, they really put together and host a number of spectacular live in-person events. I've attended quite a few of them, including their crown jewel event called the Investor Summit, which I attended in person in 2016. And that was about a 10-day event then. And you want me to let you in on a little something? Do you want to know the dirty truth about their Investor Summit? When the real estate guys tell you about it, they tell you why it's such a terrific event, but they misrepresent it. Yep, they misrepresent it. Why is that? That's because it is even better than they say it is. I would know from my own experience. Let's talk to them today a little about their highly recommended live events and learn more about real estate syndication. I'd like to welcome in 2 special guests today. The first is a professional investor. Back when he was a top producing real estate agent, he ranked in the top 1% of sales in the world's largest real estate organization. And for 4 years, he taught real estate practices and appraisal at the college level. And his investment and development companies, past and current, are probably valued at more than yours. That's over $800 million. He's the co-author of an excellent book that I've read, Equity Happens, and the host of the nationally syndicated radio show, The Real Estate Guys. Think about how often I've recommended you listen to The Real Estate Guys over the years. And that show is now in its 27th year of broadcast, and the podcast version is one of the most downloaded on real estate. It's heard in more than 190 countries, rather. Welcome to GRE, Robert Helms.
Hey, Keith, so great to see you, and thanks a bunch for having us on today.
Co-host of the Real Estate Guys radio show and resident financial strategist. He is an avid student of economics, and his background is really diverse: real estate investing, financing, and syndication. And he is a spectacular teacher. I know that through personal experience. He helps you grow and protect your wealth and income through real estate and real asset investing. Hey, welcome back to GRE. It's been a few years. Russell Gray.
Nice to be back, Keith, and congratulations on the growth of your show.
You guys have had a lot to do with it. And to you, the listener and viewer here, I called them special guests earlier, and they really are that to me and more. Robert Kiyosaki, he helped me learn how to think. And the real estate guys here with us today, they help me learn what to do with that line of thinking. So that is the plane that I put Robert Helms and Russell Gray on. But they're also 2 really giving guys. I even think of them as approaching the heroic because their influence on me has been that substantial and tremendous. So it's hard to overstate how great it is to have you guys here.
It's such a pleasure.
Humbling.
I remember that discussion we had at the New Orleans Investment Conference when you had just started your podcast. You and I and Beth Clifford were talking, and you told us about it. And look what's happened, man. Just really, really proud of the work you do. We continue to appreciate just the way you approach the market. You call it like you see it, and you get a lot of it right because I know you study and research a lot.
One thing I think I've helped some people do is get them out of solely the mindset of thinking about investing, and they think about Wall Street and stocks and mutual funds and ETFs and so on, and let them know how real estate's made more ordinary people wealthy than anything else. And sometimes people that are there and they bought single family homes up to 4plexes and have maybe added some apartment buildings. Some people think, well, wait, could I ever be a full-time real estate investor and go bigger faster? And that's something that you guys have been real masters of helping with through real estate syndication. It's kind of a funny sounding word. It sounds like it has something to do with the Italian mob or something like that, syndication. But tell us about syndication, which is a way for investors to go bigger faster, especially if they want to go full time.
Keith, it's great when folks figure out how to live below their means, invest some of that extra capital into buying a little rental house or two and build up over time. Love that. For some people, they get to the point where they really get the real estate bug. You know, your regular listeners, those folks that have listened since the beginning back in 2014, I think, when you started.
Yes.
And, I think what happens is those folks run out of their own ability to qualify and their own capital. And so they have two choices. They can just stop and wait till they acquire more of those things, or they can figure out a way to bring other people along. And a syndication is a simple idea that just says, hey, rather than each of us go buy $100,000 property, what if 10 of us got together and bought $1 million property? Now, it's not quite that simple. There's some legality and so forth you need to learn, but it is the way that almost every really large real estate project gets done. Most of the big projects are not done by a single individual or a family. Most of them are done through real estate syndication.
I think there's also a couple of other big benefits. And one of them is the fact that you get to combine the activity of earning money with the activity of investing money. A lot of people who work a day job, they go to work and they put in their day and they earn their money. And then they use their spare time, nights and weekends, to do their investing. That's a lot of your time. When you are a syndicator, you're spending your daytime raising the money, which is how you earn, and investing the money at the same time. And you're investing right alongside your, what we call your capital or your fellow investors. So that's advantage number one. The other advantage, in addition to getting your time back, is scale. If you've ever run a small business, you know that when you run a small business, you have to do everything. You're the salesperson, you're the accountant, you're the janitor, you're everything. And the key to being able to get out of some of those more menial jobs or jobs that you prefer not to do is to have a business big enough to support the payroll, to have the people on board to do those things for you. So you just get to live in your sweet spot. Syndication allows a real estate investor to go there. You bring people on board who handle a lot of the things that you're handling when you're too small. You got to do your own due diligence. You got to follow up on all of the filings and make sure that you know where everything's at. You can begin to bring people on board. So the two advantages of getting your time back are scale and the fact that you're combining the activity of both earning and investing into one daytime activity.
Now, syndication at its core, I really think about that as the marriage between investors' capital and a deal. And we're talking about real estate here. That deal might be agricultural parcels. More commonly, it might be something like an apartment building, or maybe it's even something like car washes. Maybe to the prospective syndicator, they're wondering, how would I find the right deal? And also, how would I find the investors? And you run an event twice a year called The Secrets of Successful Syndication. So you're very used to beginner questions with syndication. Is that sort of a common question? Are there concerns? And does there tend to be more of a concern with having found the money or finding the deal?
Yeah, good questions. There's two sides of it. One side is if you're busy doing your job, whatever you do to live, thrive, and survive, and you'd want more exposure to real estate, but you don't have the time to fly around and check out markets and look at properties, then investing passively as a syndication person might make a lot of sense. And in that case, you're going to find a team that's doing the work. On the other hand, the people we spoke about before, people that have real estate experience, they know markets, they've got a team built up, and they could do more if they had more capital. Those kind of folks can become the syndicator and look for the capital. We think of it this way. We think of the horse on a track with a jockey. The track is the market that the property's in. The horse is the deal, and the jockey is the person driving the deal. And that's the person I'm vetting. I want to make sure we're on a good track. I want to make sure it's a great horse. But the jockey's super important. And it's a way that you can get exposure to deals you probably couldn't do on your own when you start to expand your mind into investing on either side of the equation, either the active person that's doing the work and continuing to scale up like Russ talked about, or if you're just a passive person that says, I got more money than time, I'd rather put my money with a great jockey.
I think a lot of people who get started in real estate investing, when they run out of their own money, it's because they find more deals than there are money. And typically they'll start to wholesale. That's a way that a lot of Main Street investors deal with the problem of having more deal flow than money. They just flip the properties that they can't do themselves to people who can do them. That's a great way to go. Syndication takes that same concept, but instead of flipping to the investors and just giving them the deal, what you do is you retain the deal and you bring the investors' money to the deal. So a lot of people that are in the wholesale business just don't understand syndication is actually an opportunity for them to stay in the deal that they otherwise couldn't do. Instead of just making a little referral fee or a flipping fee, they actually can get a piece of the action in two different ways. One is you get paid an active fee for running the deal, just the same way a mutual fund manager gets paid a money management fee. And then you also get the carry interest, is what they call it on Wall Street. You get a piece of the action on the back end. If you run the project profitably, then you're going to get a piece of the cash flow. You're going to get a piece of the equity growth. You're probably going to get a piece of the tax gain. How you slice all that up is determined by you, your accountant, and your lawyer and your investors, depending on what it is they want and what the deal provides. But it's not a lot different than the way a lot of other folks who are already in the space deal with the problem of not having enough money. The other thing that is great, once you begin to understand that problem, just like any person who's out there got a lot of deal flow and you got to go find investors to flip to or to wholesale to, again, it's the same problem. It's just now you're looking for people who aren't looking to close in their own account. But to your point, Robert, they're going to be people that have more money than time, and they want to have that passive experience, like investing in the stock market, like investing in a mutual fund, but they want exposure to a real asset class like real estate. And of course, syndication isn't limited to just real estate, but obviously we're the real estate guys, and real estate is a great way to begin syndication. We have a lot of people who branch out from there, but there's a lot of advantages to understand how to do syndication. And it's not a lot different than what a lot of Main Street real estate investors already know how to do if they were only aware of the vehicle of syndication.
Russ has begun to touch on the old WIIFM. What's in it for me? It can be quite lucrative for successful real estate syndicators. And when it comes to matching up investors with deals, Robert, I know you've got this great milk and cereal analogy. I heard it myself for the first time when I attended your syndication event back in 2015.
Well, the challenge, if you get into the syndication business, and at first, the typical thing is, I have a deal, I don't have enough money. So most new syndicators, that's their primary focus, is how do I meet investors? How do I find people that would be suitable for this investment? Once you're in the business a while and you have some success and some track record, then what happens is you have more people bringing you money than you have deals. And I just use the milk and cereal analogy where, you get a bowl of cereal and you put some milk in, but you finish the cereal and there's still a little bit of milk left. So you pour more cereal in, and then now there's too much cereal, then you pour more milk in. And the point is, it's never exactly balanced. And that's true for syndicators who do their job correctly. Now, if you don't do it right, there's nobody looking to put money into your deals. But when you do, then you're going to have the problem. And as problems go, it's a good one, of having more demand for your projects than you have projects. And that speaks to the thing Russ talked about, which is scaling. If you're interested in doing bigger deals, more interesting deals, a variety of deals, you're going to need to build up a team. Doesn't mean you hire a big building full of people, but it means that just like now, you have a team of property managers and brokers and lenders. You're going to have a team to help out with things like owner relations and the tax side and taking questions from investors. And so it's not which side do you want to be on, it's what works for you and where you are in your career. Most people are never going to be a syndicator, but a lot of people are going to be interested in passively investing, especially those who work so hard to do things like flip houses and build and construct. You can find that passive investing in syndications tends to be a lot easier.
I think if you flip over to the investor side of things, there's some other big advantages. Obviously we're talking about the advantages to the sponsor or the syndicator, the person putting the deals together. They get paid the management fee, they get paid the carry interest, they have the opportunity to do bigger deals and diversify their own portfolio. But for the investor, they have the opportunity to hold assets that are largely very private. These things are being put into what's called private placements. And so your ownership is recorded in a contract. It isn't part of some database. It's not indexed to your social security number in some searchable database where creditors, predators, taxing agents, whatever can find it. Doesn't mean that you're trying to hide anything. You're just trying to enjoy your rights to privacy through having a private contract. You can use your retirement account money to hold private placements. A lot of people think Wall Street is the only option, but it isn't. You can have tax advantages flow through your investment and give you the opportunity to offset income, maybe passive income you have from some other investments. So there's a lot of advantages to the passive investor as well as to the syndicator in terms of being involved in a syndication.
Yeah, so when it comes to learning about syndications, Robert and Russ have really been talking about both sides of it here. Being the passive investor, one of many investors in a syndicator, say 150-unit apartment building, something that seems daunting for you to buy yourself. And with ownership in a syndication, therefore, you could become a passive investor, or you could be that syndicator itself. Sometimes a syndicator also goes by the name the sponsor or the general partner, the person that's legally aggregating that investor capital together. And if this sounds of interest to you, the listener and the viewer here, I know what you might be thinking. Maybe you're thinking, whoa, this is over my head. I don't know if I'm ready for this yet. Is there some credentialization where I need some certificate or some degree? We're going to learn the answers to all those questions. If that's what you're starting to think, you're listening to Get Rich Education. Our guests are the real estate guys, Robert Helms and Russell Gray. More when we come back. I'm your host, Keith Weinhold. GRE listeners can't stop talking about their service from Ridge Lending Group and MLS 42056. They've provided our tribe with more loans than anyone. They're truly a top lender for beginners and veterans. It's where I go to get my own loans for single-family rental property up to 4plexes. So start your pre-qualification and you can chat with President Chaley Ridge personally. They'll even deliver your custom plan for growing your real estate portfolio. Start at ridgelendinggroup.com. Mid-South homebuyers, with over 2 decades as the nation's highest-rated turnkey provider, their empathetic property managers use your return on investment as their North Star. It's no wonder smart investors line up to get their completely renovated income properties like it's the newest iPhone. Headquartered in Memphis with their globally attractive cash flows, Mid-South has an A-plus rating with the Better Business Bureau and 4,000 houses renovated. There is zero markup on maintenance. Let that sink in. And they average a 98.9% occupancy rate with an industry-leading 3.5-year average renter term. Every home they offer you will have brand new components, a bumper-to-bumper 1-year warranty, new 30-year roofs, and wait for it, a high-quality renter in an astounding price range, $100,000 to $150,000. Get to know Mid-South. Enjoy cash flow from day one at midsouthhomebuyers.com. That's midsouthhomebuyers.com.
This is Rich Dad, Poor Dad author Robert Kiyosaki. Listen to Get Rich Education with Keith Weinhold. And the reason I respect Keith, he's a very strong, smart, bright young man.
Welcome back to Get Rich Education. We're talking about real estate syndication, aggregating other investors' money and putting that into one big deal with Robert Helms and Russell Gray. I think you've heard this before, but you really ought to be listening to their show. Their podcast is called The Real Estate Guys. Robert and Russ, this can seem pretty daunting to a lot of people, but having attended one of your syndication events myself, I know that there's a very easy question for a prospective syndicator to maybe ask a friend, and that is, if I found a deal like this, would that ever interest you?
Yeah, you hit on a huge thing, Keith, and that is that as we go along our everyday business and life, people are interested in what we're doing. We go to networking events, we go to seminars and things, we meet other folks, and folks that are syndicating, their job is to find people that might be interested. And you come to realize pretty quickly, not everybody is, and that's perfectly fine. But there are a lot of folks who are happy with what they do to live, thrive, and survive, right? They aren't looking to go full-time into real estate, but they are looking to deploy some assets into real estate. And so syndication sounds like a big deal, and it can be. Russ said it's not just real estate. That's true. Almost every major motion picture is syndicated. And you can usually tell when you see producer, and back in the old days, there would only be 1 or 2 producers on a movie. Today, there could be 12. Those are often the people that raised the capital to get the movie done. So you can syndicate a business. You can syndicate almost anything. But with real estate, most of your listeners understand investing in, say, a rental home in a great market. They find a market that makes sense. It's landlord friendly. The numbers work, right? They're paying attention to all that. And once they've got that kind of expertise, it's not that far of a jump to be able to syndicate. Imagine they're in a neighborhood and they own 3 or 4 houses, and their broker brings them a deal for a package of 6 homes in the area. And they think, well, gosh, I don't have enough for 6 homes. Well, this could be a perfect candidate for syndication. It's not multi-million dollars, but it's big enough that it has what Russ talked about, some room to scale and enough of a budget to hire the legal help that you need and so on. But maybe you're only raising $400,000, $500,000, $600,000. Now, on the other side, we've got folks that we've met over the years that have gone from just investing in single family houses to raising 10 million, 50 million, 100 million. We have 2 guys that are knocking on the door of $1 billion who came to the event like you did and had no idea what the word syndication meant at the time. So you can get big, but you also can start small. And I think that's the real message. You've already got expertise. You know something about a market or about real estate or about development or about tax. Whatever it is that you have already, you can parlay that into the ability to attract investors.
I think it's about sharing. When you have a good deal and you want to share it with somebody to help them advance their financial future, they're grateful. It's not selling. They're happy to be involved in the deal. It can be very simple. 2 people can go in on a house. Anybody that's ever done an owner carryback, that's a form of a syndication. Even though they're not in equity, you can raise both equity and debt. So if you say, for example, I don't have good credit, I can't get a loan. Well, you might be able to raise money, and instead of giving someone title to the property, you give them a mortgage on the property and a pledge to pay them some income, which gives them a yield. And so they're just like, from their perspective, they've invested in a private mortgage. You've got a capital stack of debt and equity that makes up the deal. And once you master the principles at a small level, the only thing different in scaling is how big the project is and just adding zeros and commas to the numbers. Of course, the condensation on the pipe, the small percentages, whether it's profit or management fees that you get, I'd rather make 10% of a $10 million project than 100% of a $100,000 project, or even, you see what I'm saying? And so once you understand that basic concept, I think one of the other dangers for people, once they get the idea, I can syndicate, there's a lot of people that actually have syndicated that just don't know it's syndication. That's one level of ignorance. But the big problem is that when they've done it and they haven't followed the law. So syndicating, selling people an interest in any investment where their return on investment is dependent not on their effort or decision-making, but on yours. In other words, if you are the person putting the deal together and the people you're raising money from are depending on you to make them a profit, doesn't matter what the legal structure is, that is a syndication. And so you have to do it in a way that's compliant, or if something goes sideways, that's when you have the Securities Exchange Commission coming knocking on your door going, hey, you didn't follow the rules, and that can be trouble. You don't have to be afraid of it. It's like anything else, right? If you know how to obey the law in whatever business you're in, you're just going to comply. So one of the most important people you're going to have on your team is going to be an SEC attorney who's going to help you prepare the paperwork and understand what you can and can't do. And again, we talked about scale. If you're going to do a small deal, the costs of doing that eat up all your profit. But if you do a big deal, then these expenses to do it right are just very minimal burdens on the overall project.
Russ is touching on something that I asked about earlier about degrees and certifications. You're going to find that requirements there are rather light, but yes, you do need to do things in accordance with SEC guidelines. I think one thing that a lot of us have learned in life when it comes to real estate deals or anything else is, say someone wants to syndicate some self-storage units. All right, well, they're pretty dry and pretty boring sounding. A lot of times it doesn't come down to what you do. It comes down to why you do it, and really having a story and a bigger picture and a bigger purpose behind being a syndicator. Can you speak to that some more?
Yeah, absolutely. In fact, our mutual friend, Ken McElroy, always says that the story is more important than the numbers. The numbers are important. The deal has to work. You have to be in a good market and it has to make financial sense. But there's always a great story around any real estate project, property, or market. And the story can get enhanced when you layer onto it the passion part of it. We have lots of folks in our world that syndicate deals that are good returns, but that's not exactly why they're doing it. It's more of the conscious capitalism. There's a reason. There's a need they're trying to serve. People that are in more difficult neighborhoods who are trying to create clean, safe, affordable housing. And there's a lot to that. And that can be a great deal to syndicate. We have people that are doing far-reaching projects, around the world, not just in the U.S., and there can be this component there. Doesn't have to be, but when you're trying to attract investors, sure, they're interested in a return, but they're all also interested in the impact that real estate can have. And let's face it, real estate is one of the best products for that, because we get to help families live in a clean, safe, affordable place, or businesses to work there, or food to be grown there. And so it's not all benevolent, but it's what Jim Rohn would call enlightened self-interest. When I invest in real estate, then I'm helping in a way. I remember the first time we had Robert Kiyosaki on our Investors Summit, and he stood up and he said, if you own one house and you live in it, then you're pretty selfish. But if you own a lot of real estate and you allow other people to live there, then you are generous. And to me, great. It's summed up by Zig Ziglar's quote, you can have everything you want in life if you'll just help enough other people get what they want. That's what you do with your show. That's what syndicators do. They help other people to make return. They help other people in terms of the properties and the marketplaces. And then if they do it right, they get financially taken care of as well.
Sure, it's not complete altruism, but there can be a greater mission here. It's like I often say, hey, provide good housing. Let's abolish the term slumlord.
Yeah.
It's interesting, Keith. I have a quick story kind of along those lines. And so there was a period of time where I served on the board of directors of a nonprofit organization in Santa Clara County. And they had been in a business for 25 years, but they always paid rent. And I was the treasurer, and I went through the financials, and I saw over 50% of their donations were going to pay rent. And I said, you really need to own real estate, but they didn't have any credit. They weren't really organized properly to be able to borrow conventionally, but they had a list of avid supporters who believed in what they were doing. So you talk about the story. And so we offered the investors, or we offered their list, the opportunity to help fund a building, but not as a donation, but as an investment. And so their list, their followers actually funded through their own retirement accounts the purchase of a building for this particular ministry to operate in. And the return on investment wasn't just financial. It was that they were actually funding something that they thought was good for their community, that they were already funding through donations and continued to do so. But they were also able to unlock the power of their balance sheet. And instead of just owning some random asset in Wall Street, they decided to own a valuable asset with a mission they believed in right there on Main Street. So I'm a big believer of Main Street, investing in Main Street. In your local community, you and the people in that community are the first ones to know what that community really needs, whether it's an apartment building, a self-storage center, a new car wash, an office building, a medical hospital. It doesn't matter. You're the first people who know it's needed. You're the first people to understand the value it could bring to the community. Why shouldn't you be the people that actually fund it and earn the profits? We think you can, and we think you should, and syndication is how you do it.
That's a terrific story, and that just makes so much sense. So real estate syndication, really a way for you, the listener, the viewer here, to go bigger, faster. If you've always wondered, what's next for me? And okay, maybe it is 1031 exchanging your duplex into a fourplex, or maybe it's something bigger sooner, or maybe it's just knowing that there is something bigger out there later. So Robert and Russ, are there any last things about syndication that our audience really ought to know about? Because it's not something that we talk about very often.
The biggest thing is just understand that there are legal and tax implications. That's not to scare anyone away from doing it. It's just to be aware. And mostly syndications are not registered securities. They rely on an exemption to security law, which means you need an attorney that knows this stuff, but there's a lot of good ones around. And then you also need to figure out, you're making a big change in that when you invest solely in your own account, then it's up to you. If you do well, if you make mistakes, if you stub your toe. The minute I take $1 from somebody else, that is a sacred trust. I have no way to guarantee the return, but I am taking on a much higher degree of a relationship with somebody when they put their hard-earned money into my deal. And so you don't want to take this lightly. You have to be serious about it. I can wake up one day and say, oh, I'm tired of that fourplex. I'm just sick of dealing with it. I'm just going to sell it. Can't really do that in a syndication. You're going to have to stay the course. You'll have a plan. You've got to execute it. And just remember, other people are relying on you. But it is one of the very best business opportunities there is.
That's right. You guys train syndicators, and I think you've often learned that a syndicator will treat a dollar from someone that's invested in their deal even better and show more concern for that than they would their own dollar.
And they certainly should. Yeah. Actually, Keith, I'd say this. If you're the type of person out there who's thinking, I would be scared to death to invest somebody else's money, you're exactly the type of person who should do it, because the alternative is to cede the responsibility for investing other people's money to people who don't care. And there's a lot of them out there who will just take other people's money and not care about it because they're not afraid of losing it. They don't care. So if you care, you're the right type of person for this business. And the last thing I'll close on is really a mentality. You opened up the show talking about Robert Kiyosaki, and Robert Kiyosaki's seminal work, Rich Dad, Poor Dad, is a paradigm shifter. That's really what it is. It changes the way you think. When it comes to syndication, fundamentally, it's a Donald Trump quote, ironically. If you're going to be thinking, you might as well think big.
Yeah.
Right? If you're going to invest, you might as well invest big. If you're going to do business, you might as well go big. And so I think a lot of people just lock themselves out from doing anything big because they don't think it can happen to them. But we have seen over the years, and we've been doing this a long time, a dozen years, we've seen many people come in and raise 10, 20, 30, $50 million. And you get a small percentage of that, 5 or 10% of that between your fees and your profit. You're making an awful lot of money, a lot of 7-figure incomes. And so procrastination is expensive. If you have $1 million a year income in your future in the syndication business, then every year you wait costs you $1 million. Every 6 months you wait costs you $500,000. Every month you wait costs you more than $80,000. And that's just on $1 million a year income. Do the math. If you have a $5 million or $10 million a year income. So think bigger, give yourself the benefit of the doubt, find out what it's all about, and ask yourself, do I have the chops to do it? Meet some people who are actually doing it successfully and say, are they any different than me? Are they any smarter than me? Do they work any harder than me? Do they have any special innate talent that I don't have? And I think you're going to find out, no, they don't. It's available to you too, but you have to open your mind up to the possibility.
Well, that's a great point in how you guys, as Russ says, create these environments, these live events that you've regularly hosted for years, including the Secrets of Successful Syndication event that you host twice annually. You have one that comes up in October, I know. And sort of like Russ was saying, if you've ever wondered if syndication is for you, meet some of the other people that are in the room, and you're probably going to find out that you know some things about real estate that they don't know. We've talked about your podcast. Again, for you, the listener here, it's called The Real Estate Guys Radio Show. I personally don't listen to very many podcasts. I listen to the Real Estate Guys every single week. Robert, you made mention of your summit, your annual investor summit, which you hold in Belize. It's coming up in June. I have attended it in person. It is the greatest real estate investing and just overall investing event that I have ever attended. Tell us a bit more about your next and upcoming Secrets of Successful Syndication event and what one can expect there.
If you're listening live, there's one right around the corner, but depending on when you listen to this podcast, we always do it twice a year. Usually once in the spring and once in the fall, and you can find out all the details at our website at realestateguysradio.com under events. It's 2 days, and it's not designed to teach you every single thing about syndication. What it's designed to do is give you the big picture. And after those 2 days, you will understand every single component. And in many cases, you'll have a homework, which will be to go get a relationship or do some more study or meet some more people. But the big thing that's always just blown us away since we started this event in 2011 is the quality of people that show up. In the morning, the first day, I usually say, raise your hand if you own at least 4 income properties, and almost every hand. I mean, this is a room of movers and shakers. Yeah. And the last 2 events have been over 300 people. They all have great stories and great market knowledge and just that buzz. A lot of people have done deals, syndication deals, and they're coming to learn more. And some people are just investors in their own account. I would say the majority, or passive investors that want to learn about this avenue. And it's a really great opportunity to invest a couple of days and see if it's for you. You might decide, no, it's not, but at the very least, you'll have met some cool people. You'll get to hang out and network. And who knows, maybe syndication is in your future.
Well, the center where you can learn about their events and everything else that they do is at their website, realestateguysradio.com. Robert and Russ, it's been great learning about how to go bigger, faster, and how everyday investors really can take things to the next level. Thanks so much for coming on to the show.
Keith, thanks so much for having us. It's great to see you, and keep up the good work, my friend.
Thank you, Keith.
Oh yeah, great stuff from Robert and Russ, as always. When you think about how I often tout the benefits of leverage, and even that leverage builds wealth so fast that it makes compound interest look slow when you do it right, think about it from this perspective. Oftentimes, you're putting a 20 to 25% down payment into the deal, and then you're borrowing the other 75 to 80%. But syndicators, they get to use even more of other people's money, even more than that 75 to 80% borrowed from the bank. Yeah, because now you're using the bank's money for the loan and the investor's funds for the down payment, or maybe most of the down payment, because you are going to find that the most successful syndicators, oftentimes they put a little skin in the game themselves. They might invest 5% or 10% into the deal. That's a practice that you might want to adopt as a syndicator. And see, that's just something that makes sense. That's being congruent and aligned. You would only put this together for others if you would think that it is a good deal yourself. Now, whether you've realized it or not, let's take a friend of mine and a fellow Pennsylvanian that we've had on the show here many times, Dave Zook. Most recently, you'll remember that last year he was here to talk with us about car washes and the unique opportunity with a car wash franchise. Well, Dave is a syndicator, so you actually got a good look at what he does. Now, you might not want to be a syndicator, and maybe you were just happy investing alongside of him like a bunch of you did. For you, perhaps it made sense as a passive investor to invest in someone else's syndication like that, a car wash in this case, because say you don't want to do real estate full time. But if you might think you want to do real estate full time, I have put the link to their next live in-person event called The Secrets of Successful Syndication. That link is in the show notes for you. Now, the next syndication event is in just 4 days, and then their following one is in the fall. So we've discussed a rather advanced concept today. This was not a show for beginners, but it's something that's not out of reach for you. And hey, big thanks again to Robert Helms and Russell Gray. It's always special for me to talk to them. They've done so much for me. In fact, I would go so far as to say that if it weren't for them, you might have never even heard of me, because this show might not even exist. That's how much I think of them. So, hey, the next time you see them, among other things, thank them for this show, weirdly. Now, real estate enthusiasts and seemingly everyone else watch those enduring popular flipping shows on television, HGTV. You're in your dentist's waiting room and they seem to play something like that. Well, the star of multiple HGTV house flipping shows, including Flip or Flop and Flipping 101, Tarek El Moussa, will be here with us on GRE soon. In fact, he's the star of the most popular house flipping show of all time, and he's got a great story. He wasn't even an experienced flipper, and he fell into these mega popular national flipping shows. Other great guests are coming up here too. Yeah, I really hope you enjoyed stretching out perhaps what you thought was possible today with real estate syndication. Thanks for being here. I'm really grateful for your listenership. Until next week, I'm your host, Keith Weinhold. Don't quit your daydream.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.
The preceding program was brought to you by your home for wealth building, GetRichEducation.com.